What's up, everybody? This is Steve from Altcoin Buzz, and I've got another video for you today. I know it feels like it's been a while since I've been on the high horse here, but I'm finally back at it doing one of my own videos. Over the last week, we've got our podcast launched, and I took part in a couple of those. So stay tuned to those. If you haven't checked those out, we're finally up on iTunes, and you can find our podcasts here on YouTube and elsewhere. And before we get down to business, make sure you're subscribed to our channel. After you subscribe, hit the bell next to that for notifications. You can also check us out on Twitter. We're at AltcoinBuzzIO. And we're also on Instagram. We're at AltcoinBuzz on Instagram. Those are some great places where you can stay up to date, where Jeff and some of the other people on the team will drop some knowledge bombs and some entertainment on you from time to time. Obviously, with a bit of a sea of red going on, there's a lot of people losing some faith. And you know, first week of red, people were staying strong. Second week of red, weak hands really started to panic. Third week into it, the people who were calling the first week and the second week people weak hands are turning out to be weak hands in and of themselves. So those people are going by the wayside for the time being. Obviously, a lot of these people are fair weather investors and people who are investing money that they needed access to sooner than later. Otherwise, they could hodl. And you're only going to be able to hodl if you stick to rule number one, which is never invest more than you can afford to lose. And that allows you the security to wait out stupid times like these where the market's going to do these ups and downs. This is also a relatively decent time to rethink your strategy. You know, the coins that may have been outperforming during a bull market aren't necessarily the coins that you might want to dive into during a bear market or whatever you'd like to call the last couple weeks. And even in crypto, bear is just a term being thrown around to show a downturn. Doesn't necessarily mean that it's going to be a long-term thing. So let's dive into some of these things. And I'll fill you in on what I've been up to a little bit. I've been doing some research, and I'm really thinking about getting into doing some more mining. Right now, I've just been doing it more of a hobby and learning along the way, and basically trying to figure out what I don't know. If you've got some suggestions on mining, drop them in the comments below. Maybe some mining pools that you're a fan of. I'm already on a couple of them. I've been testing them out, just really sticking my toes in the jacuzzi. And it also seems like cards are getting hard to get a hold of. Surprise, surprise. And that'll be one of our topics we're going to cover here. So if you take a look, we're at CoinDesk right now. This is one place you can get your cryptocurrency news. It's fairly reliable. I like to read through it and give it a skim because they certainly talk about a lot of different topics. One of the things I saw on here that was of real interest to me was of JP Morgan blockchain spinoff raises $2.25 million. Now that's not necessarily a lot of money for something like JP Morgan, $2.25 million. I mean, come on, man. They probably charge you that much in ATM fees in any given month. But the fact is that these guys are into doing a blockchain-based project. Everyone who's in the financial sector that's been saying, oh, you know, this is crap, don't invest in this, don't invest in that. Well, they've been going behind our backs, building their own projects. So it should give you guys some faith that the legitimate banks out there are actually eyeballing the technology, and in this case, smart contracts, and they're jealous of it. They want to use it, and clearly they see it as a threat. Don't even put it past yourselves to believe that they could even be financing the FUD that's out there on the market. So, and it's easy to find FUD right now. If that's what you're looking for, you're going to find a heck of a lot of it. So we're not going to dive deep into that news, but just keep in mind that even the big boys out there on Main Street in the banking industry are eyeballing this technology to solve some of their problems. All right, now Cointelegraph is another great place to get your crypto news. There's a lot of FUD on here too today. Read through it. I mean, there's good, there's bad. You be the judge. And if you really just want to read some financial news regarding the crypto market and you just don't care whether it's good or not, just go over to CNBC. These guys know nothing about what they're talking about, or so it seems. Jump in. It's always going to be FUD. Look at this. All right, so everything I showed you up to this point has been cryptocurrency market related. Now let's take a look at CNBC's investing section. This mostly pertains to Wall Street, but could also pertain to anything like venture capital, startups, and cryptocurrencies. And we're going to find out that they are basically FUD, 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 FUD. Because we all know that mainstream news is big on fear and negativity. Those are things that drive concern, get people talking, get eyeballs to advertisements. And of course, they're trying to sell me some crap here up on the right-hand side with some ads based upon something that I guess my wife must be looking at. Now they've got here, oh no, sky's falling on Apple. There's a little less iPhone X demand. I tell you what, man, crazy beautiful phone, right? I don't think they built a bad piece of technology there. But anybody would love to stick a knife in their back, just like they did to Julius Caesar. So here they're doing that to it. Now here's a piece of good news. We'll dive into that. But just take a look at how much the rest of this is just negativity and fear and doubt. And this is in regard to the stock market, which is also doing very well. So it's just basically everything's either clickbait or what have you. It's just junk. So let's take a look here. This is probably not news to people that are out there in the crypto sphere. If you've tried to get your hands on mining cards, graphics cards, ASIC miners, you name it, the prices are sky high right now, and the supply is short. You know, you want to go down to your typical big box retailers like Best Buy, places like that, as if there was a Radio Shack or Circuit City these days. They're not going to have them in stock for the most part. And I've been trying to research where's a good place to get them without getting ripped off. If you guys got suggestions, drop that in the comments below because I'm actively looking. And no, I'm not trying to buy a used rig. I'm trying to buy everything new, warranties and so on and so forth, because I could stick the warranty in my pillow at night and sleep good knowing that the crypto fairy is going to take care of me if something goes wrong. But here's where they're talking about one of the shining lights. Not only is this crypto-related news that's here on CNBC, and this is also good financial news because AMD is a stock that's on the stock exchange. That's important to know because it's a business, just like NVIDIA, that's getting positively impacted thanks to the demand that there is out there for their graphics cards, of which they're being used for mining cryptocurrencies. Ethereum being one of the big ones that comes to mind, but there's certainly many, many others out there that you can mine with them. So here in the next few days, I've heard that NVIDIA and AMD are going to be releasing their financial statements for Q4 2017. The outlook is particularly good right now for AMD because they were sitting around $10 a few weeks ago. Now they're at 13 and some change. The investors are speculating that there's going to be big news and that in Q4 they will have greatly exceeded even their increased expectations that they had based on Q3 and earlier performance. And if you know how the cryptocurrency market performed from November through December and even into the very first week of January, you'll know exactly why people got bit by the mining bug. Most people that I've talked to about mining want to talk about how it's not profitable, how it's just a waste of time, how blah, blah, blah. Obviously, you got to be aware of proof of stake. If proof of stake comes out on something like Ethereum, that's going to make mining Ethereum essentially obsolete. And then there's probably going to be a lot of these graphics cards that are sitting on the market right now, going into the secondary market, back into the gamers' hands who want them in the first place at greatly reduced prices as people try to mitigate their losses. And then there'll be another cycle of people and they'll probably end up in the trash too, but then there'll be another cycle of people the moment the market becomes profitable, and then those people will be trying to mine again. Because miners appear to be just like investors, bad investors, and this isn't to say all miners are that way, but there's a lot of bad miners out there who are just like bad investors that use the same mentality of pay sky-high prices for things when things are at their all-time highs and sell it off the moment it's at their lows. What happens to the people who are mining these things and believe in them before those currencies even have great values? Let's say you could mine for a break-even right now. Like you could buy a mining rig and you could break even within 12 months, given power costs and all that stuff. Would you do it? Do you need the money in 12 months? Obviously, you wouldn't want to spend money on a mining rig and put it on your credit card and then pay 12 months of interest, so on and so forth, and just end up biting yourself in the butt. But there's certainly a lot of things to consider about mining. And think about the people who were mining Ethereum last year and mining Litecoin and Bitcoin and way beyond that, right? If they're still holding on to their coins, people were saying it wasn't profitable back at the early part of 2017. And certainly, yes, there's larger block size, so certain graphics cards are no longer able to download the DAG for Ethereum. And then there's also increased difficulty because there's more people mining the currencies. What would happen if proof of stake came along for Ethereum is that the people who are mining Ethereum would then jump onto other altcoins, would start mining those, and then the block difficulty on those altcoins would go astronomically sky high, making it no longer profitable, causing people to just panic sell their mining equipment, of which then everyone and their grandma would have a graphics card or mining rig to keep them warm during the cold Siberian summers. But the idea here is that just because you could tell me it's not profitable today doesn't mean that it's not a long-term strategy to get into. And I certainly believe that there's reasons to do it. One, I like doing it as a hobby. It's something I've learned a lot from in the past few months as I've been dabbling in it and observing it. I've been doing it very casually without any significant investment. And I've seen some return, right? It's fun because I see it come back and pay off in the form of money. And I don't know how much electricity I've been spending doing it because, as I said, I haven't been taking it seriously. But I bet you I haven't been doing a whole lot. But now I'm looking at getting into it from a serious aspect, of which I'd like to be able to find out and speculate which currency should I mine for the future gains. I'm not really sweating the cost of the rig at this point, but then again, I'm not really looking to buy rigs that cost more than, say, an Audi, or even a Volkswagen, I guess, at that point. I'm looking at buying something that's scalable, modest, and not necessarily do it yourself. Now, I've done a little bit of research, and not only would I suspect that right now we have AMD and NVIDIA booming right now, but think about all the PC gaming manufacturers out there. A few of them, like you got Razer, you've got Origin, you've got Alienware and stuff like that. These are companies that have long-term price contracts or fixed price contracts on the graphics cards that they get from AMD and NVIDIA. And when you're looking at $699 Radeon 580 Pros and things like that, and 1080 Ti's and Founder Editions with 11 gigs or whatever, don't quote me on that, I might be slightly wrong. I'm looking mostly into AMD, and it could just be me rooting for the Cowboys or something like that. In that case, not a Cowboys fan. But I'm just talking about some blind trust there. But I'm thinking that, at $699, you could almost buy an entire gaming computer with two graphics cards, two of the 580 RXs, and end up paying basically about $1,500, of which case you would then have motherboard, RAM, processor, power supply, warranty, so on and so forth. And then you could buy two of them, and then strip the parts out of the second one, put them into another one, then grow and get a dedicated CPU or a dedicated motherboard, get some risers in there and start building upon that. That is the current meta. May not be the same case 1 week from now, may not be the same case 6 months from now. Because 6 months from now, you'll either wish you had gotten into mining or you'll regret getting into mining, and nobody has a crystal ball. We all wish we had the DeLorean we could jump into where we wouldn't need roads, go to the future and buy the almanac, come back, and then end up making all the right bets like Biff Tanner so we can live in the skyrise tower and all that stuff. But I just think that there's certain things in the crypto space that are worth getting into as an investor that also help contribute to the basically to the ecosystem, right? Mining is something that's a necessary evil at this point, or a necessary task at this point. But either way, I digress. We'll get back to the fact that AMD is expected to announce their earnings here any short time, and those guys are expected to be killing it. But if you're going to jump in and buy their stock right now, yes, it may pump after their announcement if the announcement hits what is projected, but there are going to be a lot of people buying it up in the last few days with that expectation, with the news running around that when they release their price statements, the price is going to go up. Then the people who bought in at sub $10 are going to be looking to dump, right? So it's not showing full telltale signs of a pump and dump, but you just have to realize there's a lot of hype right now around AMD. Now, if you're looking at getting into some traditional investing, one of the easiest ways to get into that is going to be from the Robinhood app. And we've talked about this a few times. This is actually quite exciting. But the Robinhood app is not only something that's going to help you get into looking at the stock market if you guys are in and out of crypto, but the Robinhood app is actually going to also allow you to get into cryptocurrencies. So let's bring that up and let's show you guys what they're all about. So I've been using these guys for quite a while, and I've used them for day trading on stocks. I'll have to say I'm not a pattern day trader. Because I don't have enough in my liquidity to be able to do that, and I don't trade often enough to be able to get labeled by the SEC as a pattern day trader. I stick to my 3 or so trades per week. I also don't always do day trades. One of the nice things about the NASDAQ and the New York Stock Exchange and so on and so forth is that they close. They're open for like banker's hours. In my time zone, I can get up at 6:30 in the morning, and then by like 3 o'clock in the afternoon, they're closed down. So you can actually sleep at night. And that's part of the joke here or one of the parts that I took away as a joke from the Robinhood app is that on their sign up page, they have this "don't sleep" and it's flickering like a neon sign. It reminds me of like a 1980s arcade, or if you remember Virtual Boy. Did you guys ever play that one? That one was a hot mess, but it was fun to play, and it was cool that it was three-dimensional back in its day, even though it required a tripod to play the dang thing. But I just realized there's going to be a lot of you guys out there that may be too young to even know what I'm talking about, both for the arcade and for the Virtual Boy. But here is a way you can sign up to get early access. If you're tired of paying Coinbase fees, if you're tired of paying other cryptocurrency trading fees, get on here. You're still probably going to have to pay gas prices, right? They can't get around paying the miners. But in terms of charging a fee for the network, once they roll out, they're going to be US only, we believe, but there's going to be certain states and certain coins. Here's one of the big things that it's still somewhat speculation, but here's one of the big concepts that I've had over the last few days thinking about this because I'm excited for it. The way the Robinhood app works with traditional investing is that you hook up your bank account or credit card to it and you put money in and then you get buying power. And then with that buying power, US dollars in this case, you go and you purchase your stocks. And then when you sell your stocks, you get US dollar back. It goes back into your buying power. That got me thinking that Robinhood could potentially become a very lightweight, low volume alternative to something like Coinbase, because then people could buy into cryptocurrency by putting money into their Robinhood account, purchase the cryptocurrency, hold it, and then sell it back into fiat. And they're going to launch with a few different cryptocurrencies and exchange traded funds, but they're going to be able to allow you to put in with cash into a handful at first and then like 14 or 16 of them later. And the more easily you can get in and out of one particular coin to and from fiat, the more utility that coin has as a currency. And I'm saying coin, not token, but they may actually pick up tokens too. And you can watch Jeff's earlier video this week on the difference between tokens and coins. But check out the Robinhood app. I'm not going to sit here and shill it for the sake of trying to get some type of sign-up bonus or something like that from you guys. If you want to get one, go ahead and find Jeff's. In some of Jeff's videos, or on his Twitter, if you want to find him, Blockchain J on Twitter, you'll be able to find his Robinhood referral link, and that'll give you one free stock from the NASDAQ or the New York Stock Exchange. It'll give him one. It's a good way to get people signed up for it. And then you can sign up to get early access to their cryptocurrency trading platform. Either way, we've talked about a lot of cool stuff. Keep your heads high in the FUD. Look for alternative activities and things to do in the downtime. Don't let the market get to you, but obviously stay aware of what's going on and look for things like Robinhood and some other things to be some game changers here in the next coming months. This is Steve from Altcoin Buzz signing off.